Is multifamily in a buyer's market or seller's market? A buyer's market is when there are more properties for sale than there are buyers. And in a seller's market, it's the opposite. I literally get to analyze hundreds of multifamily deals with our students every month. And it's in these trenches where I gain the most valuable wisdom that you can't get anywhere else. This is what I'm seeing right now in the real world. I'm sure you agree with the statement. It's been a seller's market for several years. In fact, for a very long time. But it looks like we're about to enter a buyer's market. And this is where the big money is made. This is where generational wealth is created in the buyer's market. And you may say, but Peter, those are all just words. Yes, words talk, but numbers scream. So in this video, I'm going to share with you why I think we're entering a buyer's market. And number two, probably most importantly, what you need to know to navigate the upcoming buyer's market intelligently. Are you ready to get started? I am. All right, so if you have any questions at all, you can text me directly to 833-942-4516 and I'll get back at you. Let's go. Here's why I think we're headed into a buyer's market. Real estate has always been cyclical in nature. It goes like this throughout the years, and I've been in all of them for several times in my 25 plus years in this business. So I know today, or the last for several years, we're in a seller's market, and a buyer's market is inevitable. It's going to happen. It's just the nature of the cycle. So, but there are signals to pay attention to when it's going to happen. Now, as I mentioned before, words talk, but numbers scream. Now, interest rates, as you know, have been elevated for a long time, for several years now. And what this does, it puts downward pressure on multifamily owners, okay? When interest rates are high, what happens here is many, if not thousands of millions of multifamily owners, their loans are maturing, their loans are coming due, right? Meaning they have to either sell the property or they have to refinance. The ones they have to refinance, okay? Their loans that they got many years ago were at 3 to 4%. Interest rates today are elevated, okay? 6, 7, 8%, where they can no longer refinance. So that's one part of stress in the market. The second part is this. Insurance costs has gone up for all of us, okay? Property taxes have gone way up. And overall operational costs as a multifamily owner, all of our costs is going up. What that does is that has eroded our net operating income for the property, okay? And as you know, from all of the teaching here, as the NOI goes up, so does your cash flow and your property value. In this case, the NOI is eroding. It's going down, hence the sad face. Hence, that's a signal, ladies and gentlemen, about what's going to happen. Now, as I mentioned before, words talk, numbers scream. Take a look at this article here. Here's what I'm seeing in the marketplace today. Number one, I am seeing, and you can see also, we're having more distressed sellers in the marketplace. Number two, we are seeing price reductions everywhere, okay? No matter if you're in Austin, Texas, or all the way in a small town in the East Coast, we are seeing price reductions. And number three, the third indicator, we're seeing for listed properties, longer days on the market. It is happening, okay? What once took 35 days to sell a multifamily property is now taking 70, 80, 90 days to sell their property. Okay, what does this all mean? This means that what you're seeing now is a shift in leverage from a seller's market to a buyer's market, okay? And this is a signal that we're about to have a market transition. This is especially true in B and C class multifamily properties in secondary and tertiary markets. We see it. I get to analyze hundreds of deals per month with my students, and in these trenches, when we're buying and selling, I see all of this happening. So this is happening, and it's going to happen in your market and in my market eventually. The question is, are you ready? And that's what I want to talk about next. Every successful commercial real estate investor has a mentor. Get mentored by me and my team by applying to be our next protege. Click the top corner. Here's what you need to know to capitalize intelligently on an upcoming buyer's market. It's going to happen. Number one is you need to target motivated sellers. Okay, motivated sellers could be, for example, if you're looking at a deal that's online and has been marketed for more than 60 days, guess what? That seller is motivated. Now, in our situation, in our company, when we mentor our students, we teach them how to find sellers directly. Okay, we go direct to the owner where we can really have a face-to-face conversation with them and understand their motivation. And their motivation is usually personal, financial, or there's something going on with the property. And when you get those, you can translate those seller motivations into great deals. Okay, so focus on motivated sellers because this is where you're most likely to cut the best deals. And if you're looking to do some creative financing, you don't have a whole lot of money, this is who you want to focus on. Okay, number two is to follow the debt. As I mentioned a few minutes ago, a lot of commercial loans, and especially multifamily, are maturing soon. They're ballooning, meaning they're coming due, and the multifamily owners have to pay the bank off, and they can't because their NOI is so low, it doesn't support the new loan with the 7 to 8% interest, right? I produced a video on the looming debt crisis that you need to watch because it's happening as I speak. Okay. And number three is to focus on cash flow, not appreciation. Okay. Because in a buyer's market, guess what's going to happen? Okay. Property values are going to stagnate and it may even dip a little. Don't be concerned because you're going to focus on cash flow and not appreciation. Okay. If you can focus on cash flow long term, guess what happens? Appreciation will come. Okay. So in a buyer's market, you have to stay calm and focus on cash flow, not appreciation. Buy on cash flow today and not cash flow tomorrow. Okay, got it? All right. Number four is to be patient, be ready, and think long term. Some of my best deals, some of our students' best deals have come from being long-term owners. They bought during a lull in the market, and that was some of the best deals we've done. So this is where you'll be able to ride the wave to prosperity and make life-changing money. So the key is to stay disciplined. Okay, discipline means be patient. Don't jump on every deal. Okay, focus on deals in great markets, stable properties, good employment. Okay, be ready. Okay, and next, think long term. In commercial real estate, in multifamily, money is made long term, not in 1 or 2, 3 years. Okay, long term. That's where life-changing money happens. And lastly, is to get educated and act fast. Okay, you can get educated by getting mentored by us. We mentor folks all around the country, or you can take a course. Okay, we offer that too. It's all free, so check it out. And you need to act fast. Okay, because when these deals hit the market during a buyer's market, they are not going to last long. They're going to be on the market and off the market. So you need to act fast. And how you act fast intelligently is to get mentored or take a course so you can understand all the fundamentals of how to make good offers. The best time to invest in real estate is always 5 years ago. The next best time is today. Let us mentor you so you can get started investing right now. Click the top corner. It's coming, y'all. All right. We're going to have a buyer's market before you blink. All right. So be ready. I hope this helped you. Got it? All right. All right. So if you hung out this long, you are absolutely my favorite. Thank you so much. I appreciate you so much. If you want more videos like this, do me a favor, click the like button, subscribe to our channel so we can send you more of this content. Thank you so much, and I'll see you at the next video.